When the market takes a nosedive, all eyes turn to companies like MicroStrategy. So today, we're going to deconstruct their playbook and try to understand exactly what they're doing while everyone else is panicking.
So this is the big one, right? This is the question that's causing a lot of pain for investors. You look at your brokerage account, you see Bitcoin is down, say 5%, and then you see MicroStrategy is down 9, maybe even more. It's a real gut punch, and as it turns out, the answer to that question is at the very core of how this company is designed.
You know, in the middle of all this turmoil, the CEO, Phong Le, actually did an interview where he addressed all this head-on. And you combine that with Michael Saylor's recent kind of mysterious visit to Morgan Stanley, and suddenly we have a pretty clear window into their strategy right when the pressure is at its peak.
Okay, so let's start with that painful volatility we were just talking about. According to management, the stock's wild swings aren't a bug in the system, they're a feature. They've intentionally built what you could call an amplification engine.
Yeah, the CEO didn't shy away from it. He called it an intentional design choice. See, MicroStrategy was never meant to be a calm, low-volatility way to get a little Bitcoin exposure. It's deliberately built to use the capital markets to create leveraged, long-term exposure. And leverage, well, it cuts both ways.
And that really lays out the trade-off, doesn't it? The whole goal is to outperform Bitcoin over many years. But the consequence, the price you have to pay for that potential upside, is that you will absolutely underperform during these sharp, brutal drawdowns. The pain is literally part of the plan.
So the big takeaway here, according to the source material, is that all this frustration we're seeing, it's not because the company's model is broken. It's because the market's expectation for some kind of stability is just smashing head-on into a structure that was built from day one for amplification. Okay, so all this volatility naturally leads to the next big question. Can the company actually survive these downturns? And that brings us to their financial shock absorber, their reserve fund.
So what are we talking about? We're talking about a reserve of roughly $1.44 billion. That is a pretty significant war chest to have ready for moments just like this.
But let's be real. $1 billion is a lot of money. But with the company's financial commitments piling up, you have to ask, is it actually enough to ride out this kind of storm?
Well, let's put that number into perspective. The company has about $800 million in annual obligations, things like interest payments. So that reserve gives them a runway of about 2 years, give or take, maybe even stretching to 3, to just operate without having to sell anything.
And that's the whole point of the reserve. It's not there to guarantee more upside. It's there to remove the risk of being forced into a bad decision. It buys them time. It lets them operate without getting fragile in a market that's punishing everyone. It's all about resilience.
And that focus on resilience, it really gets us to the very heart of their operation. Because this isn't just some financial strategy you can map out on a spreadsheet. It's a strategy that is built on a very powerful core belief system. For them, this is a thesis, not a trade.
Look, management is pretty clear-eyed about this. They know that in the short term, Bitcoin acts just like any other risk asset. It gets tossed around by whatever the macro liquidity situation is. But their long-term view, the one they're betting the company on, is that Bitcoin is actually foundational capital. Its true value will be driven by structural adoption over time.
And the CEO, Phong Le, just laid it all out on the table. He said, this business only works if you believe in Bitcoin. Without that deep conviction, none of this, the leverage, the volatility, the pain, none of it makes any sense.
So what do they mean by foundational capital? To them, Bitcoin isn't something you trade day to day. It's a generational technology, a macroeconomic innovation. And that's exactly why they don't even try to time the market.
Their buying logic is actually pretty simple when you break it down. They just ask one question. Can we raise capital at a price that's higher than the value of our net assets and then use that capital to buy more Bitcoin for our shareholders? If the answer is yes, they do it. The current price of Bitcoin doesn't really factor into that decision.
So if they're not sitting around reacting to the daily price chart, what exactly are they doing? Well, their recent actions, including that trip to a major bank, suggest they're busy building for the long term, right in the middle of this bear market.
And this is where things get really interesting. Michael Saylor shows up at Morgan Stanley, drops a single photo online, and then crickets. No explanation, no announcement. And that, of course, just got everyone speculating.
So what are we supposed to make of that? Is this a cry for help, a sign they're in trouble, or is it something else, a proactive signal of strength, a power move?
Well, if you look at it through the lens of their long-term thesis, it wasn't about capitulation at all. It was about building the financial rails for the future.
We're talking about things like custody solutions, credit offerings, figuring out how to use Bitcoin as regulated collateral, all through trusted institutions that people are already familiar with.
You know, it's funny. It's important to remember that part of the reason MicroStrategy gets so much heat is because they're so incredibly transparent about everything they do. The risks feel louder and scarier simply because they're more visible than most other companies.
So while most investors are glued to today's price action, it seems management is focused on moving their model forward. They're building for the next phase. And that really highlights the huge difference between just reacting to volatility and actually executing a long-term plan.
Which leaves us with one last question to chew on. In a market that's completely driven by volatility and fear, could it be that a transparent, long-term plan is actually the most valuable asset a company can have?